joining us. Thanks for taking a pause out of your day to be with us. I hope this is interesting, valuable, enlightening, and informative. Some quick tips. Okay, so we started a New Year, New You entrepreneurship series. We did the first one on mindset in January. That recording is on our YouTube channel, so feel free to check it out. Obviously, this one today is on money, and then we will be doing a follow-up on marketing in March. My name is Chelsea Brem. I'm the regional director here for the Northern Rhode Island SBDC. And I do have an entrepreneurial background, so a lot of these things that I'm going over, I have been in the trenches of. So why this session, why we're developing out this series is because a new year requires a new mode of operation, personally, professionally, mindset, as well as in your businesses. 2025 changed so many things. We're in a time of great flux and uncertainty, but also great opportunity. So old strategies might not be working anymore, but there are great growth opportunities, and we can bring clarity, resilience, and adaptability to be able to grow. And I always like to remind people of this. You can't build a new future with last year's way of thinking. And then just a quick update on to refresh everyone. There were some new first timers here. The Small Business Development Center, our mission is to train, educate, and support entrepreneurs and small business owners within the state of Rhode Island. We offer one-on-one business advisory, counseling and coaching services, as well as resources. We have a wide array of connections that we can refer people to. And please stay on touch of our website. We regularly have updates on trainings, workshops, online, as well as in-person support for all of your business needs, from pre-venture to established businesses to mature businesses. And we even get into succession and transition planning. Okay, I am actually just going to turn off my camera now that I've introduced myself so we can dive right into this. Okay, I wanted to cover this money. We are going to be addressing money EQ and money IQ. Money EQ is the emotional awareness and emotional intelligence around money, as well as money IQ is the skills. And money is so important. If everybody could just actually just take a pulse on how does money feel to you today? If there was one word that came to your mind around money today, what would it be? Anything, just throw it in there. Okay, possibility, exciting. Anybody stressed, overwhelmed, procrastinate, maybe don't want to check their bank accounts. There's, and not to say that, neither one is good or bad, but there is some realities here around money feels very charged. And it's not just math, it's actually meaning and the stories that we create around money. And our ability to make good financial decisions is sometimes shaped by our childhood, our memory, our experiences, our beliefs around money, language, and mindset. So sometimes money can be stressful and overwhelming. Other times, money can be empowering and possibility and creativity and freedom. And I think this is an interesting table here, 2 by 2, is if you have money and freedom, you might feel empowered. If you value freedom, but you don't have money, you might be happy and might see money as a restriction. If you have money but no freedom, you might be frustrated. And unfortunately, if you have no money and no freedom, you might feel a sense of helplessness. And the only reason why I say this is just to start with the awareness of, money isn't just the dollars and cents, it's the meaning and story behind it. This is exactly what happened before. Elena, help. I don't know why this happens.
Okay,
I can't
no
even.
worries.
All right, so today's focus. This money session will cover, again, the awareness around your story and your style and what you make money mean, as well as shifting from scarcity to an abundance mindset, reviewing your revenue targets and how to grow and scale your business, as well as just some fun money, cash flow management strategies, and then really truly hoping that we align our revenue goals with our financial confidence to have greater confidence and abundance mindset to better manage and grow your business. Okay, again, back to the EQ of money, your emotional intelligence and your emotional regulation around money and your relationship with money. So, how do you think about money? And then how you think about money informs how you might feel about it and the emotions that come up around it, as well as then translate to how you behave around money. If you think of money as creativity and possibility and opportunity, then you're going to feel excited, empowered, hopeful, and then you'll behave as if you put your money towards opportunity, towards freedom, towards growth. On the flip side, if you think that money is, stressful, challenging, overwhelming, that there's, limited resources out there, that could feel, daunting, stressful, overwhelm, and perhaps it might not lead to the best, strategic growth decisions for your business. Your money story. Sometimes it helps to reflect on what was your first memory of money? What was the messages growing up? There's lots of, stereotypes around money that money is, the root of all evil, or, wealthy people might be doing something wrong, or you have to work hard for your money. Money is hard to come by. The thing, money doesn't grow on trees. Or on the flip side, maybe you were surrounded by a family that, created opportunities and possibilities, and there's a little bit more comfort or freedom around money. And I think it's very interesting to take a look at these things as to the root of your relationship and your interaction with money. And then it also informs, your way of being now as an adult, as an entrepreneur, as a business owner, and what are you making money mean now? And creating this awareness just opens up opportunities. It opens up opportunities to shift, to reframe, but it also opens up opportunities for further growth and development. These are some other interesting things around our meaning of money. I think it's very important as entrepreneurs and business owners to really get honest with ourselves that money is not your identity, your sense of self-worth. Money's not your savior. Money's not your enemy. Money is not avoidable. We all need money. And money is not fear. So can we gain awareness around this? And can we shift to money is energy, it's flow, it's a resource. It can be a source of empowerment. You can create jobs, impact people's lives. If you have employees, you're helping your employees send their kids to college. If you There's a lot of things around gamification these days. You could think of money as a game, as strategic chessboard moves. Money is also an amplifier. So if there's something already in existence, money is just going to amplify it. There's quite a few of these. There's different money styles. In simple forms, you could be a saver, you could be a spender. These money styles came from Lewis Howes' book on Make Money Easy. You might be a you might be a director. So you might be, confident, goal-driven, very decisive. But the bottom here is, in all honesty, there's also a shadow side to these personalities. So while you might be confident, decisive, sometimes you might be a little bit controlling. You could be an energizer. You could be very visionary and adventurous and see opportunity everywhere. However, that might lead to some impulsiveness or some risk taking. You also could be generous, caring, service-driven, values-driven, this shepherd side, but also there might be some reluctancy or some avoidance around money. Last one, the analyzer. You might be very logical, very detail oriented. This might lead to overanalyzing and overthinking and might be stuck in making some decisions. So I go over all of this to say that your background money story, what you make money mean, as well as your current style, might just impact your current strategy in your business. And perhaps your first money memory and what you make money mean might still be running your business. So again, this is really truly just to create the awareness and some framework and building some tools around this. And again, no personality is right or wrong, but it's only to have the awareness and to manage yourself well. There's obviously the ancient wisdom quote of "Know thyself." Okay, I did this in the mindset training as well, but I love this model of shifting, being able to shift mental models, and obviously the most relevant one to money is from scarcity to abundance. So there might be some mental models around scarcity, some procrastination, some avoidance. You might underprice yourself. You might underprice and overwork. Um, Perhaps maybe not fully valuing yourself, your services, or your business. There could be some decisions driven by fear. And what's all underlying that is possibly some limiting beliefs and some fearfulness. I highly encourage us as, entrepreneurs and business owners that all want to grow, expand, make positive impact in our businesses, our communities, our employees, and our families, that there is great advantage to shifting here. So to shifting to an abundant mindset around, curiosity, creativity, great decision making, so that you're viewing things as expansive and empowered and that there is unlimited resources out there. It might not feel like it, but that you can create solutions and solve problems to create more opportunity. So again, I would offer the reflective question of what other limiting beliefs or money lies or ways that you're making money mean that might not be serving you well or servicing your business well, and what might you need to let go of. And some of these quotes just highlight this and wrap this up. Our relationship with money is an emotionally intense, intimate relationship. Your money story is true for you and shapes everything you do. You can create a new money story and strategy that better aligns with who you want to become and how you want to grow your business. And specifically for this series, New You in 2026, what you want to create and build for your goals this year. This is a very interesting book that I just wanted to highlight and highly recommend to people. The Psychology of Money. Um, and there's some real key interesting takeaways here around luck and risk matters, the power of tail events, long-term thinking. I think it's very important to not be short-sighted, but to always be playing the long game, that patience and consistency are keys to growing and lasting wealth. Save and invest wisely. We all kind of know these things, but it's a really great book. And aligning spending with values and your value system. And I think that that's also very important to think about as an entrepreneur, business owner. What's your belief system? What do you value? And making sure that money and financial decisions within your business match up to the core values of yourself, but also the core values of your business. There's also a very interesting chapter in this book around when is enough and what is enough. And I think that's very important. I know very highly successful business owners that it's never enough and they don't know when enough is enough. And that leads into their concept of risk. If you think that it's never enough, you might be inclined to take some big risks. And just a quote here, the highest form of wealth is the ability to wake up every day and say, I can do whatever I want. That's by this author. But that gets to the notion of freedom, that we can really create an empowering sense of freedom through our view of money. Okay, so now getting into kind of the nitty-gritty of how this can help you and a little bit of reflection. So let's do a financial set reset for the new year. The key questions to ask yourself for Q1 and going into Q2, but really for the whole year to view this as strategic, intentional planning for the whole year. What are your revenue goals for this year? How can you maybe create additional revenue streams? Is there more value that your business can offer, and how can you translate that into revenue streams? Are your prices aligned with the value, and are they sustainable? Do you have a good handle of your cost structure? Perhaps you're underpricing yourself. Perhaps you're not collecting on your invoices in a timely manner that could be affecting your cash flow. Perhaps there's some, costs on your P&L that are really hurting your profitability. And where are there growth opportunities? Not just to do more work, but to really create, communicate, and deliver the real true value of your business so that you're meeting your customers' needs, you're solving their problem, and that you're really truly driving revenue outcomes for your business. And again, I think it's really interesting to think about how can we shift from kind of just survival, in the trenches of our business to that higher level of strategic, intentional planning. Okay, I love just always reviewing how you're creating and delivering value. This is a value appreciation ladder. So people tend to value us only as much as we value ourselves and our businesses. So really taking a look at, and then people pay for clarity. They pay for clarity on how you are communicating and delivering your value. So maybe this is just a reflection point of, recognizing the true value of your business, how you're offering it. Potentially, there's some ways to further customize or personalize things to build customer loyalty and have them keep coming back. Perhaps there's some additional ways that you could package your value, whether it's different communication or promotions strategies, marketing messages. Maybe there's a way to even add additional value and then to scale. And also, it's important to remember your branding, your imagery. Does everything of your business, A to Z, does it really truly reflect and communicate the real true value that you're offering and delivering? I think I don't know if people remember this is a very, very helpful lens on looking at business structure and cash flow. This is from good old Robert Kiyosaki, the book Rich Dad Poor Dad from the 90s. My dad made me read this actually when I was in middle school. Fun fact. So, and again, there's no judgment here, there's no right or wrong, and don't even feel any pressure to make any adjustments or shift. I just wanted to highlight this. So, you're either an employee, obviously exchanging time for dollars, or possibly you're self-employed and you're still exchanging time for dollars. And there is this notion that possibly, do you own your business or does your business own you? And are you doing a job within your business? Shifting over to being a business owner, this is where you're no longer exchanging time for dollars, but you have leverage. So you own a system, whether it's a business operating system or employees, or you've developed like a flywheel in the business. So it's not just relying on you, and it's not just relying on your time, but you have leverage to grow and scale an existing business system and structure. And obviously the investor side, but that's not necessarily relevant. But I think that's just a key thing to just contemplate. Again, neither is right or wrong, and don't feel any pressure to jump quadrants. But it is an interesting thing to look at some growth opportunity, from quote unquote, just being self-employed to really truly being a business owner and putting those systems in place and creating some leverage. I have a lot of clients that are looking to do exactly this. They're looking to hire people and have employees and grow their business. So that's why I just thought I would, highlight this. Okay, so getting into cash flow itself. Obviously, we know that cash is oxygen. Cash is the oxygen of your business. Profit is not necessarily cash flow, but cash flow is what keeps your business alive. And I wanted to just highlight some awareness around this. The awareness beats complexity. And, I came up with some interesting notions of, where where is my cash? Where is the cash? And so, we can all remember that, cash flow is not necessarily a moral issue. It's not right or wrong. It's not even just a math problem. It can actually be related to just your leadership style and leadership habits. So looking for ways to improve leadership and management to maybe access some increase in cash flow. So again, I'll review this further, but being aware of, your bank statements, the money that's flowing in and out of your bank on a regular basis, your inventory, sales funnel, your invoicing process, and your accounts receivables. And again, just some tips on simple cash flow habits for better monitoring, control, and tighter systems, hopefully without overcomplicating things. This might seem very basic and simple, but hopefully this is valuable and useful for you, even if you just take some tidbits out of this. But obviously checking your bank on a very regular basis, knowing your cash position, checking balances, checking, deposits, debits, knowing what your cash projections might be, as well as keeping, a buffer of, at least 2 to 3 months or more of expenses in your account. Sometimes it's easy to not double check things. Also, inventory. Cash might be sitting in your inventory. Formerly, I had a beverage company and we were constantly, like literally every single day, if not definitely in our weekly meetings, checking our inventory. We were always keeping track of cases of beverages on pallets, how many pallets we had in the warehouse, and just thinking that's $200,000 worth of cash sitting in the warehouse. What do we need to do to drive sales? So again, having a very tight inventory management process, and lots of, habits to check that regularly. And also not over purchasing or overbuying. Okay. And then getting into invoicing. This also might seem simple, but these are quick tips. The faster the faster you invoice, the faster you get paid. So some simple habits: invoice quickly or upon delivery. Make sure you have very clear payment terms, whatever it is, whether it's COD, net 7, net 14, just having very, very clear payment terms from the beginning, actually, even in your service, your contracts, your service agreements, putting it very clearly on the invoice, and then also making it very easy for customers to make payments. Whether, you have Stripe or Squarespace, QuickBooks, or people are doing ACH payments, we would always have our, bank account routing number, everything on the invoices, so that it's, you have a very tight system, very tight invoicing, system and monitoring and following up. Accounts receivable. This is obvious, but also just reviewing this on a weekly, in my former team, we would review this on a weekly basis. We would flag any invoices and whatever it's relevant to you, whether it's, you do COD and you need to flag invoices even on, a couple days late, 7 days, 14 days, we were constantly reviewing our AR, flagging invoices, and then having a system to regularly, politely but consistently follow up. This can be challenging, but there was times that, you look at your AR and you're like, oh my gosh, I have, whatever the number is, I have 50, 60, $70,000, in AR out there. And again, making sure that it's a very tight system, it's in your contract, it's in your service agreements. Um, and then lastly, cash flow might also be in your sales funnel. So being very clear on your sales funnel, how you're generating leads, but then how you're moving leads down the funnel, how much potential revenue is in your sales funnel, and what do you really need to do to convert the leads and the conversations or the contracts that are out there being reviewed into actually closed sales, closed deals. And then knowing your conversion rate, even if it's rough or even if it's on a timeline to say, okay, it takes, you know, whatever it is, 2 to 3 weeks or 2 to 3 months from the time I send out a contract to get feedback and to close the deal. Knowing your habits, knowing your system, tightening up your system, and how can you minimize the time between contracts or conversations and an actual closed deal. Another obviously crucial issue is cost structure and the hidden leaks. So I think it's extremely important to have a very good, clear sense of your COGS, cost of goods sold or cost of services. And again, just I'm sure we all know, but your cost of goods sold is all of the costs that go into a finished product that is ready for sale. So for instance, I had a former beverage company, so everything from, production, labeling, packaging, the cans, and even the landed cost of transport into the warehouse where the final product was ready for sale was all included in our COGS. Cost of services, if you're a service-based business or B2B, can be your materials, your tiles, your lumber, any equipment that's directly related to your ability to deliver those services, labor specifically that's for your services, maybe some permits. And then, just as another little example, if you're a yoga instructor, the whatever is included in the cost for you to be able to deliver that class, the cost of the instructor, any materials in the class, or even if you're renting, it's very different. This is not your office space or your rent, but if you're specifically renting a room to deliver those services, that could be in your cost of services. Again, cost structure, being very clear on fixed costs. Oh gosh, this is in reverse order. My apologies on this slide, but obviously it's fixed versus indirect costs, or no, this is correct. Sorry, fixed versus variable costs or direct versus indirect costs. Being very, very clear on those and the structure of those. Obviously, variable costs change with your sales volume. So if it's an increase in ingredients, materials, credit card fees, if you have sales reps on commission, and then in some, quick examples of indirect costs could be, insurance or subscriptions. Being very clear on what your cost drivers are. So identify your top 3 cost categories, and is this accurate? Is this in line with your goals? Sometimes clients have very, very high salaries. Like there's some people on salary, maybe family members, or some very high salaries that's preventing them from being, profitable. Or you might notice some other large categories, sometimes IT services, sometimes credit card processing fees. So whatever it is, again, it's not it's the point is to be very aware and to identify those things and make sure that they're either in line with your business goals or they're in line with actually, driving business outcomes and the growth of your business. We all get sucked into these things even personally, but definitely in your business, look for any hidden costs. Maybe there's, subscription things, there's tools, there's items that, you don't really need anymore. You could cancel, you could cut out, or that are no longer serving your real business needs or are no longer supporting growth right now, currently in the stage of where your business is at. Obviously, look for ways to reallocate funds, whether it's marketing, promotional campaigns, things that really drive sales. And even these small changes, even the heightened awareness and regular monitoring, regular viewing, even small changes can create real impact. Again, it doesn't have to be complicated, and an income statement or other known as your profit and loss statement is a really great leadership tool, and is very important in one of the many financial statements. So make sure that you're reviewing this on a monthly basis. Create reoccurring money meetings, either with your if you have a bookkeeper or a controller or your accountant, whoever is with you on your money team, make sure they have regular reoccurring meetings to review and evaluate things. Focus on trends, not perfection. It doesn't have to be perfect, but you just want the awareness of how things are looking. And again, this is to reduce fear around, your finances, but also to have a sense of, empowerment, control, consistency, so that you don't get overwhelmed later. Okay. And then I'm sure we all know this already. Just wanted to put this structure in here. I actually wanted to include two different versions to think about. The very simple, standard, easy one is on the left side, the standard P&L, revenue, cost of goods sold, or cost of services, and then obviously gross profit. You might have a very simple, streamlined business that it's expenses, payroll, rent, utilities, insurance, miscellaneous, and then your net profit. If you have I was more in my former business, I was more on the right-hand side. If you're B2C, if you have a consumer branded product, I like to break it out like this. So G&A and then marketing, because if you're doing a lot of marketing or you need to do more marketing or you have more marketing line items, again, this is my personal yet professional opinion is if you have a great marketing need or want to do more marketing, I recommend and use the right side. But again, the left side is just standard, simple P&L. Again, this is hopefully you find this useful. This is a quick little tip that is very simple, but actually very powerful. So doing a contribution margin analysis. And this is a very simple example, and I can tell you how I used it in real life in my business. But if you take how much your sales price, how much your product sells for versus your COGS, that's your contribution margin. And then obviously just a simple little analysis. If your rent is $1,000 a month and $8 is your contribution margin, you have to sell 125 lobster rolls to make your rent. So not to say that you run your whole business like this, but it is a little tip. It's very useful, very informative. I also would do it on the marketing side. There was times that, we were doing a specific marketing event, a specific marketing promotion, and just for some rough numbers, in my former business, our contribution margin on a case was $12. So if we were doing a $5,000, marketing budget, 5,000 divided by 12 equals, 417 cans of beverage products that I have to sell to to break even on the marketing budget, but using your contribution margin. So again, quick little fun tip. Again, not that you run your whole business like this, but it's a good checkpoint. Okay, that is what we have. And again, thank you all for listening. We can open it up to any reflections, feedback, comments. But again, I hope this was helpful. And if I can just state again, my why for doing this is that I care about the whole person. As entrepreneurs and business owners, we bring our whole full selves into our businesses. Our business is so much a reflection of who we are. So I think it's important to consider your whole self by looking at the money EQ and IQ, and that this can be eye-opening, enlightening, empowering, so that you're combining the thought, your thought, actions, behavior with some actual practical business tips. And you can, when you meet your money with clarity instead of fear, you can unlock wiser decisions and get on the side of greater abundance.